welcome to another edition of Anatomy of a Trade. I'm your co-host, John Colucci. Johnny Scan with me today, Franz Herr.
John, how are you doing today? I'm doing just great. And today we're going to do an abbreviated little study of a trade that was submitted by Joshua in the WTC2 spring semester. A little bit of work on analysis and execution. We're coming up to the July 4th holiday in the U.S., in the States, and that's one of our biggest holidays. So we're just going to make this a short pre-holiday edition, and then it'll be posted Monday, which is the day before the 4th, so we can all enjoy our hot dogs and fireworks. So let's take a look at Joshua's trade, Johnny Scan.
All righty. So point of entry identified here. There was a trim and an exit. So let's look at the background of this trade. We see that it's a range-bound condition. Some type of climactic move initiating down, possible structure here of accumulation, move up and out, keying into this climactic action that created a small reaction. We go ahead and create a range here. So we came down into a small structure here that brought us up to really create an elongated secondary test that ended right there. So if this is the climax, the reaction, the test, we know what to expect next, and that is further testing activity, which is precisely what we got. Your thoughts here, Franz?
Well, great analysis, John. A couple things I'd like to add. First of all, we don't know what the security is, first of all, and we don't know the time scale that we're looking at, the time frame. But what we're going to show you is that we can use this, the Wyckoff methodology. It's fractal. It can be used in any time frame, so it really doesn't matter. So let's look at the background. John already pointed out kind of the buying climax. The background to that starts over there where he's got the L264. I assume that's the low price. And then we see an uptrend. It's occurring on relatively low volume. It does have that final volume spike that we see and that final significant bar with a selling tail on it. We can then go into the reversal. John's already pointed this out. I do like the reference that John made to an initial trading range, initial structure after that reaction. And notice the reaction, we don't know what's to the left on the chart, but we see that this reaction comes all the way down to whatever we're actually being shown, and basically negates that entire, the amount of the previous uptrend that we're seeing. So we could be thinking, somewhat, like I said, we don't know what's to the left, but we could be thinking somewhat bearish here when you get that big of a reaction of a previous up move. But nevertheless, we do go through this structure. John's got it marked as the support, and it does have a fairly nice, you can see there, around 2/3 of the way through the chart, there are several where it sort of breaks out of this lower local structure, John. You can see that there are about three or four bars with really nice volume coming in. Gives you some idea that there'll be some extension. Then we get this big volume spike, the highest volume spike that we see on the chart, and it's occurring at an area that we want to certainly come back to. Put a piece of chewing gum or a piece of peanut butter on that, and just remember that spot. So we see there's a bit of a reaction. It's still a T3 test of that bar. Then that upthrust, and the upthrust sets whatever area of resistance we're having. John's got it marked all the way back to the left to the previous selling or buying climax rather. We go through an area of very, very low both volatility and volume, typical of phase B. And then we have this little attempt to rally where the point of entry occurs. And I think from an an analysis standpoint, that's what I'm saying. From an execution standpoint, we might be thinking that this is some sort of backing up action. If it is, what's our cue typically to buy after the test of the backing up action? Well, we'd like to see it actually break out, break through, and begin to mark up. And we don't see that. Instead, we see this failure that occurs at a lower area, a lower low, than the area that Joshua has marked as minor. I think he means minor sign of strength there. But then we go back down, and the trade is not very long in duration. I think the first third is trimmed after the initial reaction from this, from this little move up, and then he gets out of the rest of the position about 6 bars later. So that's the trade, and those are my observations, John. So do you have anything you want to add, or do you want to go straight to the post-trade analysis?
Well, we have good analysis there. Very short-term trade, didn't prove profitable, but take a look at this. Entered in this area, saw there was a problem, probably broke the moving average that Joshua was looking at, trimmed there, and exited here completely. Not bad if you're already in, and maybe less than a optimal position, but out with potentially minimal damage. And managing a trade that may not have been a great entry is a really critical skill. So in terms of what might have been the expectations on this trade, certainly looks like it was to the long side. Timing, not too good. Character, I don't like the character there. Point of entry, not a huge fan. There was a trim functioning as a stop loss, no ads. There was a trim, and I like the exit. You're in a bad situation. You got out quickly and soberly. Your thoughts here, Franz?
Yeah, I guess the only question I would have is, what is the bias? I mean, this is a long trade. Have we identified a bullish or reaccumulation bias? Maybe, but that big volume bar, that big volume spike, about 2/3 of the way in, and sort of the volume behavior in this whole area is a little bit suspect, since we're not making any additional progress. So I might even question whether the bias is actually reaccumulation or accumulation, or something a little more bearish. So those are my only additions, John.
So that's 1, 2, 3 of, what is that, 7, 8, 3 of 8?
3 of 8, so that's 38%, 37.5, but we'll round up, 38%.
38. All right. So let's go ahead and see what Joshua thought of his trade, and that's on our next slide. What do you see here, Franz?
Okay, well, agreeing on the bias, the timing, I think we're a little bit at odds on that. The character, I'm not so sure there. Stop loss management, yes. The point of entry, he liked it. I'm assuming these are long positions. I mean, we could be looking at short sales too. So if that's the case, then everything is definitely flipped around. But we're assuming that this is a long trade. So if this was a short sale, then we're completely off target here. But I don't know, John. I think if it's long, then I would agree with our analysis, our post-trade analysis. If it's a short sale, then I think Joshua's onto something here. But at any rate, his mistakes, successful secondary test at the buying climax that I failed to realize and failed to recognize the sign of strength rally. Yeah, I mean, that would have been getting in at the lows of that first structure after that second test on fairly low volume might lead us to think there could be some sort of a rally coming in. It definitely unfolds. So I'm in agreement there. His best practices entered on the sign of weakness. You know, this could have been a short trade.
It could have been.
Looking at it. So,
Could have been.
so at any rate, took profits on the second one, sold the, yeah, so this must have been because he's taking profits. So apologies to Joshua. We got this trade all wrong. So the pros mess up sometimes. That's the way it goes. And then his feedback loop, need to look at the background to see what the price is telling me. Yeah. And analyze the secondary test more effectively. So we originally were going to call this the mystery trade because we weren't sure what the security was and what the time frame was. And now with a bit of egg, at least on my face, that we got the direction of the trade wrong. We'll say the 4th of July is coming and the fireworks and hot dogs are what we're looking forward to, and we must have had our minds on that instead of this trade. So there you go, John.
Well, yeah, it's normally we associate POE with point of entry. A minor sign of weakness would almost never occur at the top of the range. That's a bottom concept. And a sign of strength rally preceding a short trade, not something that we would normally associate with a short trade. This is long trade. So confusion on terminology, and understandably so. We will chalk that one up to experience and congratulate Joshua on a submission that really was a stump the chumps submission. What do you say?
I agree, John. That was a lot of fun. Until next time.
All righty.
And happy 4th of July, everybody.
Thanks for watching. Bye-bye.